please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The SGX Nifty is up 17 points. Asian markets are doing well today, so that of course is something which should help our market, or perhaps should help our markets, though of late we have decoupled. Ashwani Gujral, Mitesh Thakkar and Prakash Kaba now join us. Good morning, gentlemen. Ashwani, you said yesterday to take longs for March series. You think that trade could continue today?
Well, good morning. I was very surprised that Asian markets weren't as smart as our market. But it was clear, these things don't impact more than a day. Now, the issue is that you can't go ahead and buy the gap up because you are still in some sort of a extended pullback. So the idea should be to, buy the dip. So I want the market to get back to, say, 10,370, 380, and then from there, get on board, because there are still buyers and sellers both. So it may not be like a free run where everybody gets in the morning and then can easily get out. But I would expect that a pullback rally has started on the Nifty and Bank Nifty, and one that could easily do 150 to about 200 points on Nifty, and on the Bank Nifty, it could be substantially larger because that's where the big shorts are. So I wouldn't be surprised if 25,500 is also taken, because once short covering starts, whether it's a small player or big player, they tend to participate.
Okay, so longs on both from Ashwani. Good morning, Mitesh. What's your trade on the Nifty today or for perhaps a few days?
Yeah, good morning, Lata. So I think, we are still in a market which is kind of narrowing down. Nifty now, I would look at a range of about 10,320 to about 10,470. And I think the idea should be to either buy closer to the support level. So 10,350, 370 becomes your buying zone with a stop below 10,320, and try to sell it on the upper end of the range. I think we might get, a breakout or breakdown in either direction, which could be more directional in nature, but it might happen after a few days of consolidation. For the next few days, it will be small trading, I think, trying to buy it around the edges of the range. Similarly, on the Bank Nifty, I think now we've had some minor short long positions around the 24,850 mark with a stop below 24,750. And I think on the upside, 25,150, 200 remains the first target. Only beyond that, I would turn slightly more positive.
Okay, well, let's get a comment from Prakash Gaba as well. He's here with us in the studio. Prakash, hi, good morning. You get a sense that the market could be a bit more volatile, because we've seen this kind of, ups and downs in the last few days. Yesterday, we saw recovery in the last hour as well.
Good morning, Sonia. Well, to my mind, for last 12 trading sessions, we are seeing some kind of a short covering, and the pace is holding. The pattern seems to be some kind of a pattern which we call it a waterfall pattern. If the floor goes, that low that we have seen on 10,296, then the floodgates could open. As long as that holds, I mean, we are still okay. Do we see an expansion? Possible we can see an expansion, but I would be slightly cautious out there. And if we do see an expansion, where does it go? Maybe to around 10,430. That's an area I'm looking at. Perhaps you can see that. As long as my caveat is the low should hold. If the low goes today, tomorrow, day after, whenever it happens, the floodgates could open. When I look at the Bank Nifty, I think we are trading it's too stretched on the downside. The downside support is in the vicinity of somewhere closer to around 24,683. Yesterday low we have seen is 24,783. So I would say just 100 points. There's a very good chance bank could see a rebound here. It's too stretched on the downside.
Okay, let's discuss stocks then. Ashwani, all buys for you today.
See, let me first give my March view for the Nifty. Given the large sized bar that we have on a monthly chart of both Nifty and Bank Nifty, and as you people have been discussing that it's the biggest loss, March is likely to be a month which will be more flatter, which means we could go up a bit, down a bit, and finally close where we are broadly opening. So March may not be as bearish as February was. And that is something people should take on board, because if you get too overexcited on the short side too early, then the problem is you will get chopped up, because even a 1,000-point rally on the Bank Nifty will only be a pullback. So that you should remember that the odds are very high that this will be a choppy sideways type of month. Having said that, they are all buys. I'm expecting that at lower levels there will be buying, both on Nifty, Bank Nifty, hence more stocks will go up. So FSL is a buy with a stop of 48, target of 56. Escorts is a buy with a stop of 865, target of 890. Britannia is a buy with a stop of 4800, target of 5050. Kotak is a buy with a stop of 1050, target of 1120. And Biocon is a buy with a stop of 610, target of 645.
Okay, so those are the list of stock calls. What about you, Mitesh? What would be on your buy and sell list this morning?
Yeah, so I have 3 buys to 2 sells. Britannia features in my list as well. I think the overall chart setup is quite positive. Buy with a stop at 47.85, look for the first target of 5,000. Amongst the IT names, Infosys something which continues to show strength, so that's a buy with a stop at 11.44. First target of around 11.90 on the upside could be tested. And my final buy is on a cash stock, that's Ipca Laboratories, made a fresh 52-week high, I think gave a good swing breakout. That's a buy with a stop at 634 for targets of 730. 2 sell calls. Cummins India intraday charts have broken down, so sell with a stop at 831, targets of 788. And Tata Motors has broken key support levels of 365, 370. So if it bounces back to about 361, 362, take a short call with a stop at 371 for targets of 340.
Okay, so Britannia on list of both Ashwani and Mitesh, and quite poetic that the target is 50-50. That's, of course, Britannia's one of the biggest brands as well. But Prakash, good morning. What are your stocks?
Good morning, Anuj. I have 2 longs, 2 shorts. I'll start with Adani Enterprises. Looks like correction is over and up move has started. We can see Adani climb to around 210 plus zones. Stop below 200 should be fine on Adani. I like Motilal Oswal as well. Seen a good base formation here. The target on the upside on Motilal Oswal is in the region of 1250 zones. Stop below 1174 and 2 sells here. Go with JN Irrigation, more of a breakdown pattern. The breakdown could continue. Target on the downside is 108, stop above 115. And finally, Jewelers, PC Jewelers, looks weak, slide to 300 possible, stop above 350. So 2 long, 2 shorts.
Okay, 2 long, 2 short. So those are a whole host of stock calls coming in from our technical experts. But let's move on now. In an exclusive conversation with Shireen Bhanu, Uday Kotak says the market expects an NDA win in the 2019 polls. He adds that he is very bullish on road construction and on the auto space. Listen in.
My view is India also did very well in 2017. Sure. So we are giving up some of the wonderful gains we got last year. And I would be much less concerned about where we are doing vis-a-vis others. Finally, we got to draw our own future. And I think we also got to keep in mind that markets, as we go forward, will want to price in what they see as the political outcomes in 2019. The current base case of the markets as it stands today is that the NDA government in some shape or form comes back. However, as the 2018 rolls forward, markets will still begin to evaluate this as well. Therefore, in addition to macro, the politics is a factor in the context of a significantly improving micro.
So what does that mean in terms of flows then? If you're saying that the market is also going to start to factor in the outcomes of crucial state elections and of course the big general election in 2019, and you know, there could be a repeat of the performance that we saw in when this government came to power, or it may be a different story, we don't know. But what is that going to mean both in terms of domestic flows as well as foreign flows?
I think we've got to see the time. The good news, as I see it, from the point of view of being a practitioner in India over the last many, many years, is a statement which I always make, that at any point of time, India looks challenging as a photograph. But India is wonderful as a movie. Therefore, if you're invested in the movie called India, just stay the course.
Okay. So which are the sectors that you would then bet on? Which are the sectors that you believe, despite the fact that valuations may look stretched, etc., that still have growth potential?
No, right now, as we see it, we are seeing very good growth in road construction. We are seeing pickup in the activities around construction equipment. We are beginning to see this year also rural India, especially on our tractor financing and businesses like that, seeing some pickup.
But how does that then correspond with the stories of rural distress and agrarian distress that we're picking up on?
I think very often we mix rural and agriculture as one-to-one correlation. Rural economy is also getting broader. Therefore, there may be pockets where there may be challenges in agriculture. But the broader rural economy story this year is looking better. And then you got I think the auto sector in totality also looking pretty robust. I'm seeing companies begin to do brownfield investments as well. May not be enough greenfield. And then finally, if the declogging of the system happens through NCLT, I think that should be helpful. Yes, I think haircuts will be there. I think the first few results on the steel companies seem to be good, but that is not the average. So while the haircuts will be there, at least we will hopefully in 2018 declog the system.
What do you make of the bids that have come in for companies like Bhushan Steel, etc.? You talked about steel, and you said that, you know, the kind of haircuts that we're possibly likely to see, at least for the steel sector, may not mirror what we may see on other assets. But what do you make of the kind of bids that we've seen come in, at least for the steel side?
Based on whatever media information which is available, I think it's good news, especially on the steel sector. But don't make your averages based on those bids.
So, again, do you feel confident that we are going to, I mean, you know, this process of recognition is still sort of underway, but the process of resolution, and there are timelines that are put in place on account of the NCLT process, but do you feel confident that we are going to see that declogging now over the next few months?
My sense, if I take the overall average of the system, I think on the resolution side, in terms of how the NCLT process is working, we are assuming a base case settlement for most of the larger assets at an average of around 40% of the principal amount, which means a haircut of around 60% on an average. Therefore, there are cases which are going at 60 and 70% resolution. There will be some cases which will go at 20% resolution. So our view is around the 40% mark is what we should get through the resolution process. But there is another major development, which, as you are aware, is the new guidelines of RBI on reporting on SMA 0, 1 and 2. And I believe that will front end the recognition process even further.
An important development late last night that was announced to the exchange. The Ministry of Commerce has recommended anti-dumping duty on the import of dimethylacetamide. Well, this is a product that Balaji Amines manufactures, and therefore we are getting this information as well from Balaji Amines. D. Ram Reddy, Joint Managing Director of Balaji Amines, joins us on the phone line. Mr. Reddy, what does this anti-dumping duty mean to you? How much is the duty? How much more expensive does it make the Chinese competition? And therefore, how much can your margins increase?
See, we were trying for this product for the past year, and the anti-dumping is going to be attracted between 10% to 25-30%. Depends upon the company name if you see the notification. But the thing is, because of this recent Chinese development, there was a natural support for this product in the past 2-3 months. And the total revenue will be around 60 crores from this product. There will not be much difference in the revenue, but definitely this will support us for strengthening our bottom line.
Okay, so
and apart from this, in fact, we are trying for the other product called dimethyl-formamide, which is under investigation in the government of India. That has got good capacity in the country as well as our capacity also.
Okay, but just Mr. Reddy, just to confirm, the Ministry of Commerce has only recommended this duty, right? It has not come through yet.
No, it is. It is.
Oh, it has already come through? It will start from today. All right.
You said that it will improve bottom line but not revenues because of the anti-dumping duty?
Yeah.
Okay. How much can it improve?
It's very difficult to say how the market is going to react. And see, one cannot take the advantage of the anti-dumping because we are dealing with our regular customers who are we treat as our partners. The only thing is, what is the reasonable level? Which is already supporting, as I said, from the natural support because of the Chinese environmental issues from past 2-3 months.
Okay. Can you give it to us in kind of dollars or in rupees per ton? How much was it before the duty? How much will the price be after the duty?
See, for minimum $48 per ton, they are going to attract for the minimum country, and up to $211.
But that's a
maximum
big...
$200. There are few countries which are dumping at very abnormal price. For those countries, for those particular companies, they have given $211.
Okay. What about particularly for China? We hear the biggest dumping is coming in from China. So what's the pricing looking like there?
There's one company which was doing reasonably good price. That is only $48. There's one company which is doing more than $80, $90, and the other company is $211. This is need for the China and other countries. And Turkey, they are doing $48. And China, one company, they're doing $48.
Okay. All right. Very quickly, since we have you with us, can you give us an estimate of what your overall revenues and your margins could look like, not just by the end of FY18, but also in FY19?
See, this the current year closing, we will do, as I said earlier, 800 to 850 crores definitely will bring it. And next year, 1,050 crores will be doing it. Without considering the new things coming up, that the new company which we acquired 52%, where that is also likely to commission production by September, October.
Okay.
There also we're expecting about 150 crores revenue in that company.
Okay, so net, how much might your bottom line improve?
Bottom line, see, it is very difficult to say because at this moment, it has just started. How the market reacts, we do not know. Buying industry. Yeah.
Okay. Can you give us some idea, even directionally, of how much the margins can improve?
Definitely, there will be 5 to 10% minimum. There should be 5% improvement only on this particular product.
Okay.
Revenue should be there.
Okay, 5%.
And as I said, there is a big problem with the dimethyl formamide, which is under investigation presently. And if that comes, there will be great relief for us. And presently, China is already there, the environmental issue, but we are facing problems with Saudi Arabia for that product, which we expect the government will support definitely in the coming 1 or 2 months.
So any indication on when, in the next 1 or 2 months. All right, I got that. Thanks a lot for joining us, Mr. Ram Reddy. So that's a positive coming in from Balaji Amines, an anti-dumping duty on the import of dimethyl acetamide, especially a huge dumping coming in from China. So the anti-dumping duty will be a positive for them. That's something that the street has perhaps already priced in or was looking at, because the stock has seen a huge surge over the last 12 months. But ITD Cementation is the other stock on our radar right now. The top line remains muted, but it was a good operational performance for them. Let's get Prasad Patwardhan, the CFO of ITD Cementation, who joins us on the phone line. Mr. Patwardhan, good morning. You have been indicating to us in the past that revenues have been a bit under pressure. This time around, it's a drop of almost 16%. What do the next couple of quarters look like as far as top line is concerned?
Good morning, Sonia. Thank you for having me on the show. We have a very healthy order book today. In fact, post-December, we have actually received one large order of 1,900 crores from Tamil Nadu Electricity Generation Board, and a couple of other orders have also come through. So our order book today is in excess of 9,000 crores, and we expect a better performance in terms of the top line in the current year, a significantly better performance.
Okay, you know, we are given to understand that your margins looked good also because of a change in accounting. If you have to do like to like, what would the margins be? Last year ago quarter, it was 7.9%. On a like-to-like basis?
On a like-to-like basis, we would still have maintained a double-digit EBITDA margin.
So it would be 10%?
Yeah, it would be around 10% or maybe even slightly better than that.
Okay. What's the pressure on the margin, on the revenue? Why is that down?
Well, that was down because of a couple of reasons. You know, a couple of large marine orders that were under execution in 2016 and 2015 got completed in 2017. And a couple of other large orders that we received, you know, from Bangalore Metro, we received 4 orders for 2,400 crores. But the actual execution picked up only post-monsoon. So although the order book grew in 2017, we could not really see the impact of the order book on the revenues, and you will see that in the current year.
Okay, so out of this 9,000 crore order book, how much of it is from the metro business itself, and what's the order pipeline particularly from metros, from the metros?
Well, today the metros would account for roughly 50% of our order book. Okay. We are currently executing projects in Mumbai, in Bangalore, in Nagpur, and in Calcutta. And the order pipeline is pretty healthy. You know, there are more orders coming up in the metro segment in Bangalore, and in some other cities as well. So the order pipeline is pretty healthy on the metros.
All right, Mr. Patapardhan, thanks a lot for your time today. That's ITD cementation. But start of a new series is the worst over for the market. Sanjeev Bhasin of IIFL now joins us. Sanjeev, good morning. You were cautious on market when we were at 11,000, but do you think the risk reward is back in favor now, or would you want to wait for some more price and time correction?
Yeah, morning, Anuj. So February is the shortest month of the year, and this year we have 28 days, and we still have 4 days to go. February has turned out to be the worst month in the last, I think, many months. And a welcome step, because there was too much of positivity, too much of complacency, and that has put the apple cart right. So we think that markets may be oversold in the medium term. You could get a 200-300 point upside. So 10,600, 700 we think is something which you could test on the back of the positive liquidity from the local mutual funds. But February will be March will be a very difficult month, particularly the middle part. So we think beware the Ides of March. We think you could definitely break 10,000 in March and head lower than that. So we don't rule out pessimism taking you to 9,700 in March, on the back that certain huge tailwinds in the shape of bond yields, rupees, FI, inflows and sentiment all are now headwinds. So be cautious, but use rallies to lighten up your positions in March.
9,700 would mean that you're expecting March to be almost as bad as February. I mean, the yields are up already. Should one expect more selling because of that? And more importantly, you're expecting the big selling from FIIs. Is it because of LTCG?
Yeah, so Lata, if you recall, when we met on the NPA issues about a couple of weeks back, we had clearly indicated that if 3% on the US is sacrosanct, then definitely 8% on the 10-year paper here could be a possibility. It also tells you that from 1st of March, NPA recognition norms set in, LTCG becomes a huge headwind, and government borrowing now with the GST figures all over the place is telling you that yields are definitely going to rise. It also means that safety of money into yields will start to rise. So fixed income could see a welcome inflow at the cost of certain foreign selling and local selling. Thirdly, Lata, the wheel in the cog is the PNB issue, which is again going to deter a large part of fund flows into MSMEs. So I think earnings will definitely get hampered because of that. And like I said, if sentiment turns negative, you got a 600-700 point upside, which took you from 10,500 to 11,200. You can see the same reversal taking you to 9,700 if fear persists globally and locally.
Okay. Sanjeev, hi, good morning. Let's talk about some stocks then. You know, two of the buzzing corporates this morning, ITD Cementation post their earnings, and Balaji Amines, because of that anti-dumping duty that has come through on some chemicals. Any of these names that you track and you like?
Yeah, so ITD Cementation was something which was under our radar on the back of huge inflows in the metro space. That and BML have been relative outperformers. We still think that India-centric models like BML and ITDT Cementation, or some of the chemical plays like you pointed out. I don't track Balaji, but we've had a positive outlook on SRF and Atul, the leaders in that space. Those could clearly gain at the cost of China and the limited demand-supply mismatch which you have in the chemical industry.
Okay, Sanjeev, what about IT stocks? We've seen a big rally in names like TCS, for example, Mindtree, NIIT Tech. Are you buying any of these stocks?
Yeah, so Anuj, if you recall, in the last 6 months, we've had a positive bent of mind on technology, unlike the street. And we thought, not just because of the rupee now being a tailwind, the overall business on the back of IT tax reforms and huge more allocation from the US on IT budgets is going to definitely add to the prices of stocks and the earnings. So TCS, HCL Tech in the large cap have been two of our preferred picks. We still think that the party has just started, so don't miss out on that. You could add a Tech Mahindra on any decline. And in the mid cap, we think Mindtree, Tata Elxsi, Cyient, all these are looking extremely good. However, in the short run, you may see that they've already moved up quite sharply. But we think that IT in the next 6 months could be a relative outperformer. With the rupee being, the best hedge against the weakness on the dollar.
Well, there's just now an announcement on the exchange that Indiabulls Housing will be raising 3,000 crore through 10-year debentures, and the coupon is 8.43. Any thoughts on this? Is it indicating that the rise in the cost of money is not all that steep if they are able to borrow at 8.43 10-year over, GSEC 10-year of 7.889 already?
Right. So Lata, I think 8.43 will still be a stretch from 7.5, where I think you could have maybe placed that paper. But that housing market still remains, the mortgage market still remains aloof from the rest of the weaknesses in the sectors. And I think that could be a sweet spot, given that collateral borrowing and lending against housing are the best assets to be in. So yes, 8.43 or 8.45 would be a very, very lucrative price to get in. But we think that going forward, yields are definitely going to be more cumbersome for some of the other companies to raise money, given that the PSU pact will now be under pressure to lend unless we get huge, faster implementation of the recapitalization by the government of India.
Okay. So what are you buying at all in the NBFC space? You're buying housing finance, is it?
Correct. So I think Bajaj Finance, LIC Mutual Fund, HDFC, these are three names where we've seen relative correction, and they give you a good risk reward on the upside. You could add some of the microfinance companies where we think the worst of the yields may be priced in, and the effects of demonetization may be already played out. So on correction, look for an Ujjivan or an Equitas. Those will give you some sort of comfort. But Lata, if we had to do something on, we are very, very bullish on the construction space and the activity there. Okay. So we continue to be more positive on our old favorites like NBCC, where we think the price erosion was unwarranted, given that the management sounds very confident of a 30% upside both in the top and the bottom line.
Okay, that's the construction space. What about some of these auto ancillaries? Motherson Sumi, for example, has fallen 20% this year already. You think good time to buy?
Yeah, given that yesterday the management allayed large part of the fears, and Sonia, we thought at 380 or 375 the stock was very, very expensively priced. Yeah, after a 20% correction, it's actually entered a bear market, but closer to 300 you could start to buy. It's a pedigree name, and I think that as we see more stretch on volumes on the auto space, this will definitely be a gainer. Another of our old favorites is Suprajit Engineering, one of the largest players in the cable market in two-wheelers, which is expanding into four-wheelers. We think that again is a very, very big outperformer, and you should try to add that on any decline.
Okay, and finally, what about PSU banks, Sanjeev? Taking any bets here?
Well, for a change, we think that, if you wanted to be in them, then State Bank and Bank of Baroda could give you some comfort on the back that they may have weathered the storm as far as yields go for the maximum, and one more quarter you could go because treasury mark-to-markets have been huge. So compulsively, we think those two are the only ones where you should be looking at. The rest of them, you will have to wait for more murkiness to play out. But Anuj, like I said, even State Bank, I'd rather buy it closer to 250, which I think in the month of March you could see, given that we think that the market could see another fall after a rise.
Okay, Sanjeev, that's very useful advice that even where you want to buy, you'd wait for lower levels in March. Thank you very much for joining us with your quick thoughts on some of the stocks that are becoming bargains after the recent market fall. We have to take a break. We are coming back with the pre-opening rates. We will have F&O strategies for you, and we will have more experts joining you.